On Friday, S&P 500 gained 2% and the Dow Jones gained almost 2.5%. And Friday's movement was absolutely 100% confirmed manipulated. However, the most important part of this, the manipulated movement, is or can be seen in the technicals. And the biggest one is in the Dow Jones. The Dow Jones came out of the consolidation, which it was there since the early January 2026. Now, as such, this condition in the Dow Jones must be considered or must be treated as the bullish breakout. However, because of the absolute manipulation, we need to wait until the closing on Monday to confirm if there is actually a bullish breakout or if this will fall and there will be heavy profit booking on Monday. And why there is so much suspicion on the bullish breakout? For that, you need to understand what happened on Monday 2nd of February and then immediately on Tuesday 3rd of February. You can see that a similar movement on Monday 2nd of February was seen. S&P 500 moved up heavily within the first hour, within first 30 minutes, and then sustained bullish for the entire day. And through the numbers, we knew that because the S&P 500 has not tested the 695X, it was supposed to test and retest and to spend some time, like 2 to 3 hours around the 695X, and then only it was technically allowed to move up. However, it did not do that. This was confirmed that now the S&P 500 is unstable and is also manipulated. Otherwise, this was technically impossible. Then what happened on Tuesday? A very heavy intraday fall. High was 6993 and the low was 6862. Because the big ones wanted to book the profits. That's it. That was the reason they have built that trap on Monday and then they booked the profit and the entire market came down heavily on Tuesday, on 3rd of February. And how did we get the confirmation? Through the level 695X. Because on Mondays, the 695X was heavily disrespected. So I'm using the word manipulation. Why I'm using the word manipulation for this, the movement, heavy movement on Friday? First of all, the Dow Jones. The Dow Jones itself was technically not in a condition to move and to breach the previous all-time high. Number two, there was confirmed crossover in the moving averages of the S&P 500 in the morning. And the biggest one was the 685X level. This was my pre-market analysis and I posted this analysis 2 hours before the open of the stock market on Friday. And because the futures were trading up, that is why I mentioned that only in a manipulated case, SP 500 will be able to recover and sustain at 685X before 12:30 p.m. Eastern time, as technically it's not possible. However, the movement on Friday is very much different because this has changed the technicals. It has changed the technicals in a manner that the moving averages, which were earlier 100% confirmed bearish, are now forming a bullish slip. So there is a lot to discuss and there may come a short-term bullish rally if it sustains in the bull side. And if it gives up, erases all of the gains on Monday. Okay, or if there comes a very unique condition that I will discuss here, in that case we will see a short-term bearish cycle. So whether the bullish breakout will be confirmed or not, short-term bullish cycle will be there or the short-term bearish cycle will be there, is there a 100% confirmed trap? All of that I am going to discuss in detail in this S&P 500 weekly technical analysis, which is for the week of February 9th. Means from February 9th, which is Monday, to February 13th, that will be Friday. Now guys, let me tell you that I have divided this S&P 500 weekly technical analysis in 2 parts. In the first part, I will discuss the technical charts on the weekly chart and the daily chart. On the weekly and daily, I will tell you and I will show you how this heavy manipulation has affected the weekly and the daily chart of the Dow Jones and what will be its implications in the near term and also in the long term. Second part is the probable movement. In the probable movement section, I will discuss the conditions that can trigger more bullish movement and also the conditions that will trigger the short-term bearish cycle and why we are still expecting a good fall or a heavy fall in the Dow Jones, and then that will be replicated in the entire US stock market in all of the indices. All of that I will discuss in the probable movement section. So I will now begin with the technical part. But guys, before that, if you have not yet subscribed to my YouTube channel, then please subscribe to my YouTube channel and hit the bell icon. And in order to get all of these daily precise updates of the S&P 500, Dow Jones every day from Monday through Friday, you can join my Patreon community. I have given the link in the description of the video and also in the comment section. Now guys, this is the weekly chart. I'm going to discuss the technical part section first. On the technical part, I will discuss the weekly and the daily charts. So first I'm going to discuss the weekly chart. So weekly chart. So weekly chart means one candle represents 1 week, one entire week, not 1 day or 1 hour. Let's first discuss the weekly candle, first weekly candle. Okay, you can see it's a good bullish candle. The open and the closing of the weekly candle are above the 50% of the candle itself, indicating bullishness. Okay, there is no defined shape of the candle. That is why this candle will trigger bullish sentiments. What? Bullish sentiments. Okay, however, this candle is not confirming a gap up open on Monday, but it is simply confirming or indicating an initial or intraday bullish movement on Monday. No gap up, no gap down, that is not confirmed, but an initial or intraday bullish movement on Monday. That's it. Okay, because the closing is also above the moving averages and is also above the 50% of the candle itself. Okay. Now comes the last weekly candle of the Dow Jones. This candle is very significant. Okay, very heavy bullish candle, very heavy body. Okay, this is indicating heavy bullishness. Other than that, the closing of the candle is above the previous all-time high levels of the candles, of all of the previous candles. But still there is no confirmation for the gap up open. No confirmation for the gap up open. It is confirming only an initial or intraday bullish movement, and is also supporting the profit booking condition. The profit booking condition on Monday. Okay. There is a pattern. Okay, that I will show you up once I discuss the technicals. I will show you the pattern. Okay. And generally we have seen, or most of the times we have seen the repetition of the pattern. Okay, pattern is indicating a fall. Okay, so candle overall, both of the weekly candles are indicating an initial or intraday bullish movement on Monday, but not a confirmed gap up open. Why there is not a confirmed gap up open if the candles are so heavy and are so heavily bullish, just like, okay, especially the Dow Jones? Again, the same reason, manipulation. Okay, because it was manipulated. This was a manipulated movement. That is why there is no confirmation for the gap up open. Okay, however, if there comes a gap up open, so that will be a blessing in disguise. Okay, why the blessing in disguise? Because a gap up open will most likely, okay, it will trigger profit booking condition. What? A profit booking condition. Okay, so in detail I will discuss the profit booking condition in the probable movement section. Okay, so because only because this was not natural, not technical, that is why a gap up open cannot be confirmed. Okay, only it is indicating initial or intraday bullishness. Okay, that's it. Now let's analyze the technical indicators. Okay, so first the S&P 500 on the weekly chart technical indicators. S&P 500 is bullish through the Bollinger Bands, moving averages, and the Ichimoku cloud on the weekly chart. S&P 500 is bearish. It is bearish through the MACD on the weekly chart. Okay, however, there is a change. This small change is in the stochastic RSI of the S&P 500. Okay, I will show you this the struggle. Okay, so let's first cover the technicals. As of now, MACD on the weekly chart is bearish, but stochastic RSI on the weekly chart is bullish. Okay, marginally bullish. And how did that happen? Because of this heavy 2% manipulated heavy push on Friday. Otherwise, it was confirmed bearish. Okay, so overall, this indicates, okay, it is neither overbought nor saturated. So this indicates that the S&P 500 is 80% bullish on the weekly chart. Okay, now let's see what is happening in the Dow Jones on the weekly chart. In case of the Dow Jones, almost the same. The Dow Jones is bullish through the Bollinger Bands, Ichimoku cloud, and the moving averages on the weekly chart. And the Dow Jones is also bullish through the MACD, okay, on the weekly chart, but is bearish through the stochastic RSI. Dow Jones gave a confirmed bearish crossover on the weekly chart, okay, when the market closed on Thursday. Okay, Thursday it has given a confirmed bearish crossover on the weekly chart in the MACD. I'm talking about the MACD. Okay, but because of 2.5% heavy manipulated push, okay, on Friday, we have seen that the MACD was forced to remain bullish. Okay, so again, the same condition, the Dow Jones is also 80% bullish on the weekly chart. Both of the indices are 80% bullish on the weekly chart, are indicating that the entire US stock market is still in the long-term bullish trend. There is no change in the trend. Now, let me show you through the technicals. This is the struggle, okay, and the pattern, and this is the theory. So first comes the pattern. If you notice, this was the week of 5th of January. Okay, we have seen open equal to low condition, heavy bullish push, okay, in the Dow Jones and the entire market. But this bullish push was not heavy, okay, as heavy like what we have seen in the recent week. Then what happened in the next week, in the subsequent week, the week of 12th of January? We have seen limited upward push and then the fall. Okay, however, the fall was kept limited, okay, and then it entered into the consolidation. Okay, consolidation just to absorb the manipulation, that's it. Otherwise it was supposed to come down heavily. Okay, now similarly, okay, what we have seen in this the previous week, remember this is the weekly chart and these are the weekly candles, not daily candles. Okay, this is the candle. Okay, now if this the pattern is repeated, then what we will see, that on Monday limited bullish push and then fall, then Tuesday fall. Okay, means whatever will be there in the bullish side, that bullish side movement will be limited, and the bearish side will remain heavily open. Remain heavily open to what? To the open price that was there on Friday's open price. Okay, to that means 2.5%. okay, the gain that was there in the Dow Jones, entire gain must be erased, okay, to fulfill this is the condition, right? This is the pattern. There is no such pattern in the S&P 500 here. Okay, however, but before that, this was the pattern. Okay, now the technicals, let me show you the technicals. This is the MACD of the Dow Jones, and if you have subscribed to my YouTube channel for last many weeks or months or years, okay, I've repeatedly mentioned and have shown you, okay, this kind of condition. First, if you notice, the week of 17th of November, there was a confirmed bearish crossover in the MACD. Okay, this was indicating that now the Dow Jones must start its short-term bearish cycle. Okay, then what happened? Then immediately in the next week, the week of 24th of November, the Dow Jones pushed up heavily. Okay, it gained like 4%. Okay, almost 3.5 or 4% within a week. Okay, and then it brought the MACD back into the bullish side. Okay, and then from the week of 24th of November, MACD is still giving a linear movement. No, it was still giving a linear movement until the week of 26th of January. Then there was a condition that now there will be a confirmed bearish crossover in the MACD. Okay, in the recent week, and everything was going well until the end of the day, Thursday. Okay, but then to disallow this the change, that's it, the Dow Jones and the entire US stock market was heavily manipulated within a day. On Friday, 2.5% bullish push was given. Okay, no news channel, no one knew, no one has the answers. Okay, why there was the bullish push? No one had these answers, and no one still has the answer at the time of recording this the video. Okay, so this was heavy bullish push just to avoid okay, this kind of bearish crossover, because now the stochastic RSI was already bearish. Once it gives the bearish crossover, then we would have seen a short-term bearish cycle. Okay, but somehow they are keeping it alive. Who are they? They are the manipulators. Okay, they are keeping the market in the bullish side, in the bullish condition. Okay, and when do we see such kind of conditions? Especially when something big, means some big fall like correction, okay, or at least 10% fall, okay, a short-term bearish cycle or correction or recession is about to happen. Then we see this kind of movement when again and again through the manipulation. The technicals are pushed. Okay, technicals are not allowed to change their direction. Okay, and the stock market is kept bullish, not bearish but bullish. Okay, this happens especially in the bull side. Okay, so this change, first it was seen 17th of November, the week of 17th of November 2025, after 6 months. Okay, then the second was about to happen this 26th of January. Okay, almost after 2 months, but it did not happen. Okay, now this confirms. Okay, what does this mean? This confirms that whenever there comes this the change in the MACD on the weekly chart of the Dow Jones, that will then start the bearish cycle. Okay, so now answer to the question. Okay, when we will expect the short-term bearish cycle? Whenever we see the change in the MACD. Okay, but last time there was just one this the confirmed crossover. We will now wait for 2 weeks. Okay, however, if other than the MACD the numbers, okay, and some other technicals are confirming, then we need not to wait for the 2 weeks. Just confirmation from the 1 week, okay, that the short-term bearish cycle around 9 to 10% fall, a minimum. Okay, and then the correction, and then in the worst case the recession. And if you want to analyze by yourself, then you can use these the technical indicators. Okay, and put these technical indicators just before the COVID fall, just before the short recession during the COVID. You will see exactly the same pattern. Then I think 2016 was there, 2013 or 14 was there, and 2008 the recession that was there. You will see exactly the same pattern. Okay, the technicals were forced, okay, to change from bearish to bullish, and they were kept bullish, and then the fall was there. Now the technicals of the S&P 500. Okay, now if you notice, MACD was confirmed bearish. Okay, there is no change in the MACD. At least this is not happening in the S&P 500. And those who are new to my channel or new to the technical analysis, then let me tell you that MACD is the moving average convergence divergence, and it gives a linear movement, very smooth movement. Okay, for many days, weeks, or even months, and in some stocks it gives a linear movement for years. 1 to 2 years are linear and the smooth movement, because any change in the MACD, okay, it can trigger a heavy fall or a heavy bullish rally. Okay, now this was MACD, fine. This is the stochastic RSI. Now if you see carefully, okay, if you see stochastic RSI was giving, very like the linear movement here. Okay, some garbage you can see, or some distortion you can see here. Okay, in November 2024 this was there. Okay, then we have seen some forced movement in November 2025. Okay, it was forced to move bullish. Now we are seeing again the same kind of distortion. Okay, because they want to keep it bullish for some more time, until and unless everyone is convinced that there will not be any fall, there will not be any recession or any correction, and everyone will buy, and then all of a sudden we will see that there is a very heavy fall back to back. Every day stock market is losing 2 to 3%. Okay, just like what we have seen recently in the Bitcoin. Okay, so now through the technicals, it is very much clear, okay, that the market was indeed, it was forced, it was compelled. Okay, now through the numbers, there is one more thing in the Dow Jones. So on Friday in my midday update, and then again in my final update, okay, here I have mentioned, okay, and I have informed my Patreon community members that if the Dow Jones closes above 49,653.13, okay, then as such it is a bullish breakout condition. But because the stock market was heavily manipulated, that is why we need to wait for Monday's closing to confirm if it will be in a condition to sustain in the bullish breakout condition or not. Now other than that, the Dow Jones is now entering into the heavy resistance zone that starts from the 50,000 itself. Okay, and is up to 50,500, approx 50,500. There is a level, okay, in the 50,500. Okay, so there is a zone, this 1% zone from 50,000 to 50,500. It will be really very difficult for the manipulators to push the Dow Jones to or beyond this zone without giving a heavy fall. And if there comes a situation or a condition where Dow Jones is pushed heavily again on Monday, okay, then this means that something big or something huge is going to happen in the entire US stock market, not just US stock market, but in the global stock market. That is why the manipulators are pushing the Dow Jones and the S&P 500 indices beyond their expected levels, expected targets. This means that from the 50,000 itself and until 50,500, okay, it is filled with the heavy resistance levels and zones. So technically it is clear that the long-term trend is still bullish. There is pressure on the technicals and through the technicals, okay, but somehow technicals are pushed to remain in the bull side. Okay, now this will be more clear on the daily chart or through the daily chart. Okay, means we will see, okay, whether the technicals are still holding on the daily chart or not, and if technicals are not holding the daily chart, then how soon we can see the fall, and if they are holding, then how soon we will see the bullish breakout. Okay, so let's move on to the daily chart. So now guys, this is the daily chart. Daily chart means one candle represents one day, not 1 week or 1 hour. Before I discuss the daily chart, if you have not yet subscribed to my YouTube channel, then please subscribe to my YouTube channel and hit the bell icon. And so far, if you have liked this video, then hit like to appreciate, and your appreciation matters a lot. Now, let's first discuss the candle, the daily candle. So, it's a very heavy bullish candle. Clearly, a very heavy bullish candle, 2%, okay, manipulated push in the S&P 500. Other than that, open equal to low condition. Okay, means open price was the low, open price was not breached, never tested. Okay, now technically this indicates and confirms a gap up open on Monday, but because the market's movement was manipulated, that is why a gap up open cannot be confirmed. Rather, there will be an initial or intraday bullish movement on Monday. Okay, that's it technically. Okay, now this is the chart of the Dow Jones. Again, exactly the same thing, open equal to low condition, very heavy bullish candle, and the closing of the candle is our previous all-time high levels. Okay, technically it should confirm a gap up open, but a gap up open cannot be confirmed because of the manipulation. That is why an initial or intraday bullish movement on Monday. Okay, so now both of the candles on the daily chart, Dow Jones and the S&P 500 are indicating an initial or intraday bullish movement, and also exactly the same we have seen through the weekly chart, an initial or intraday bullish movement on Monday. This means that now it is confirmed that on Monday, even if there comes a fall, then also intraday there will be a condition wherein we will see some recovery. Okay, either it will recover, okay, all of the losses, or to some extent it will recover the losses, just like what we have seen on Tuesday, 3rd of February. And again, why there was so much of heavy fall on 3rd of February? Because the S&P 500 lost the 695x. Okay, it disrespected the 695x on Monday. It was confirmed that it will be coming down, okay, on Tuesday to test the 695x. Okay, it came down, but it failed to hold, and then there were hourly closings below 695x, and then we have seen heavy fall on Tuesday on 3rd of February. And you can see here that all of the first 3 hourly candles, first hourly, second hourly, third hourly candles, okay, first 3 hourly candles were below 695x. Okay, that is why we have seen that heavy pressure. Okay, and the recovery of the 695x was then limited, and chances were not good. Okay, rather we were expecting the 6,800 to be in the picture, and it was. Now let's analyze the technical indicators. Okay, through the technicals, so I will discuss the pattern and that thing later, but first let's cover the technicals. Through the technicals, S&P 500 is bullish through the Bollinger Bands, bullish through the moving averages, and bullish through the Ichimoku cloud on the daily chart. And the S&P 500 is bearish, heavily bearish through the MACD on the daily chart. And the S&P 500 is bearish through the stochastic RSI on the daily chart. Okay. The good thing is that there is no change in the MACD on the daily chart. So in this manner, okay, the S&P 500 is, or will be seen as, 60% bullish on the daily chart. Let's analyze the Dow Jones. Well, Dow Jones is almost the same. Now, technically, the Dow Jones says bullish through the Bollinger Bands, bullish through the Ichimoku cloud, bullish through the moving averages on the daily chart, and the Dow Jones is Yes, bullish through the MACD on the daily chart and is also bullish through the stochastic RSI on the daily chart. So Dow Jones is 100% absolute bullish. It is 100% absolute bullish on the daily chart. So now what we have seen that the S&P 500 and Dow Jones both are 80% bullish on the weekly charts. S&P 500 is 60% bullish on the daily chart. Dow Jones is 100% bullish on the weekly, on the daily chart. Okay, overall bullishness. Okay, so it again exactly this is what I mentioned on the weekly chart also. Okay, the market is pushed, it is forced, it is compelled to remain bullish and to trade bullish. Okay, now let me show you the pattern and this the forced movement. Okay, the manipulated movement, why it was done. Okay, so here if you see, this is the MACD of the Dow Jones on the daily chart. Fine. Okay, the Dow Jones was trading bearish, absolute bearish. Okay, now you can see a little change in the MACD of the Dow Jones on the daily chart. Remember, this is the daily chart. Okay, so Dow Jones was pushed, there was very heavy push. Okay, this and Dow Jones was pushed to the extent okay, where they can give a confirmed bullish crossover in the MACD to convince the retail traders and the technical traders that see now there is a confirmed bullish push. Okay, the bullish crossover in the MACD of the Dow Jones. Okay, so now everyone should participate in the buying. Other than that, if you see, okay, just one day before on Thursday 5th of February, okay, it gave a confirmed bearish crossover. Okay, and then it came under very heavy pressure on 5th of February. However, because of this heavy bullish push, what we have seen again, the change in the stochastic RSI. Sorry, this is the stochastic RSI of the Dow Jones. Again, a bullish change in the stochastic RSI of the Dow Jones because they want to keep it bullish. Okay, this means that something big is going to happen in the market in the near term. It can happen as early as on Monday or Tuesday, but now something big. So that was there in the Dow Jones. Okay, now what was the impact of this heavy manipulated push in the S&P 500? The biggest one you can see here, the crossover in the moving averages did not happen in the morning when it opened. Okay, when it was trading below 685x, there was confirmed bearish crossover, 100% confirmed bearish crossover. Okay, and technically a bullish retrace up to 685x was only allowed. But because through the pre-market, I was expecting some manipulation in the stock market. That is why in my pre-market analysis, okay, I mentioned the manipulated case, the 685x, and through the 685x, we will get to know whether the stock market is manipulated or non-manipulated. Anyways, the biggest change is that the moving averages did not give a bearish crossover. Rather, we are seeing a slip, a bullish slip to form. Okay, now if you are new to the technical analysis or if you are new to my channel, okay, then I've repeatedly mentioned the concept of the slip. Okay, what happens whenever we see the slip? Okay, then that kind of movement will be followed and will prevail. For example, this was the bullish slip. Okay, this was the bullish movement. And if this bullish slip sustains on Monday and Tuesday, okay, if there comes no good fall and if it keeps on moving up, if this bullish slip sustains, if not on Tuesday, then at least on Monday, then we will see the bullishness in a manner that the bearish side will be limited, restricted, and it will move up. Bearish side will be limited, restricted to what? Okay, yes, so this I will discuss in the next part, the probable movement. Okay, bullish side will be open back to the 7,000 range. Okay, now the 7,000 in the S&P 500 matches to the 50,500 in the Dow Jones. Okay, so it further confirms okay, the two zones that is there in the 7,000 range. I have mentioned, okay, clearly that S&P 500 will have to fail 100%, okay, at these the zones. So this means that even if there comes a bullish push, then also the market will fail. And this bullish push will be seen as blessing, in disguise from the manipulators. Okay, so most of the times, if you are my Patreon community member, or if you were, okay, so most of the times, okay, I have shown you that whenever such kind of manipulated movement has happened, okay, it has given us an opportunity. It has given us an opportunity to go long or to go short. But guys, whatever is going to happen or whatever will happen, I will keep you posted through these daily precise updates of the S&P 500, Dow Jones, and in a manner to the entire market, which I give to my Patreon community members every day from Monday through Friday. So I give the pre-market analysis 1 or 2 hours before the open of the stock market. Then I give the first update, then I give the midday update, then I give the final update. Okay, 1 or 2 hours before the closing of the stock market. In this manner, my Patreon community members are very well aware of what is happening, what is going to happen through the numbers, levels, and technicals. And guys, it is not just about these daily precise updates, but I also give the midweek update video technical analysis. This video technical analysis is generally given every Wednesday. Exact levels, exact numbers, exact movements. Okay, everything is discussed in this S&P 500 midweek update. And that's not all, because I also give the opportunities in the premium stocks, ETFs of the US stock market. I give the 50 to 80 opportunities every month to my Patreon community members in the premium stocks. So guys, whenever you want to join my Patreon community in order to get all of these daily precise updates, okay, and the midweek update video and the opportunities in the premium stocks, then I've given the link in the description of the video and also in the comment section. And when you follow that link, then you will see that this is my Patreon page and this is my Patreon profile. And here you will see the button which says membership options. And when you click on this button which says membership options, then you will see that there are these 3 levels, level 1, level 2, and level 3. Level 1 and level 2 are same. The only difference is the geographical location. Okay, when you subscribe to level 1 and level 2, then you will be getting all midweek update video technical analysis and daily, every day, precise updates, levels, and movement every day. Okay, level 3 is the premium level. Okay, whatever you are going to get in level 1 and level 2, by default you will get in level 3. Other than that, you will be getting the opportunities, premium opportunities 50 to 80 every month in the premium stocks and ETFs of the US stock market. And guys, if you notice, many people have joined my Patreon community for last many days, weeks, months, years, and they are getting these daily precise updates of the S&P 500, Dow Jones, Nasdaq in a manner to the entire US stock market, and also the opportunities in the premium stocks 50 to 80 and also the midweek update video technical analysis. So guys, whenever you want to join my Patreon community in order to get all of these, then I have given the link in the description of the video and also in the comment section. You can follow that link and you can join my Patreon community. Now guys, I am going to discuss the second part of the agenda, and here I will give you the probable movement. Probable movement of the S&P 500 in the coming week means the week of February 9th, means from February 9th, which is Monday, to February 13th, that will be Friday. Okay, all of that I am going to discuss here in the probable movement section. Now, first thing first, next week is full of the economic events. Okay, Monday there is nothing as such. Okay, some data is there, but that's fine. Tuesday, the retail sales data will be released in the morning. Okay, this will be the first factor. Okay, before that, the earnings season is now over. Okay, and market is not going to get any kind of help okay, through this the earnings season. Rather, on Friday, so on Thursday, after market hours, Amazon released the earnings failed to impress the Wall Street. Amazon was trading 7 or 9% okay, bearish on Friday. Okay, but because of the manipulation, okay, this 7 or 9% bearish or heavy selling in the Amazon was countered, okay, through this the bullish push through the Nvidia. Okay, and Nvidia was primary factor in the S&P 500 and in the Nasdaq, whereas Goldman Sachs, okay, Goldman Sachs was a primary factor in the Dow Jones. Whenever Goldman Sachs is involved, okay, you know what happens. Okay, now, so on Tuesday the retail sales data will be released. Okay, then comes the Wednesday, the unemployment and the non-farm payroll data will be released. Okay, this is very, very important data because this can trigger heavy bullish or heavy bearish movement in the market. Then comes the Friday, the inflation data. Okay, the inflation data will be released on Friday. In this manner, Tuesday, Wednesday, and Friday. Most important days are Wednesday and Friday. Okay, and this is the only thing that is there in the market. Other than that, if there comes any comments from the president, okay, so that we do not know. Okay, but whenever there comes some comments or heavy comments from the president, okay, then we can see that kind of movement, the fall or the bullish movement. Okay, but for now, economic data is something, okay, that we know, and it is scheduled. Now, in terms of the numbers, well, this is where everything change. Okay, in terms of the numbers, few things, okay, that we must understand. First of all, the expected bullish slip. I'm not confirming that this is a 100% bullish slip, because this was non-technical movement. Okay, that is why there is no 100% confirmation. Okay, manipulated movement. So if there comes a green candle of any kind, green candle, or there comes a limited red candle, not heavy but a limited red candle, okay, and there comes no change in the moving averages on Monday, this means bullish slip is most likely to happen. And when this happens, then on Monday we can expect the change in the stochastic RSI of the S&P 500. If there comes a green candle, then I think 100% there will be the change. If there comes a limited red candle, then we'll have to see if there is any change, bullish crossover in the stochastic RSI or not. Okay, that will be there. So this is in the S&P 500, right? Nasdaq, I'm not discussing the chart of the Nasdaq, because Nasdaq gained 100% absolute bearishness, okay, on Wednesday, and then on Thursday it followed its bearish path, and I'm talking about Nasdaq. Okay, then yesterday, because of heavy bullish push, Nasdaq gained almost 2.4% or 5%. Okay, and it has re-entered into the neutral, into the neutral zone, Nasdaq. Okay, but I'm talking about the Dow Jones and the S&P 500. Nasdaq, okay, just to get an idea. Dow Jones, what is so special about the Dow Jones is that it has come out of the consolidation. Okay, number one, it has come out of the consolidation. What happens after the consolidation? Whenever a stock or index comes out of the consolidation, we call that as the breakout. What? It is called as the breakout. Okay, it happens in the bull side, then bullish breakout. If it happens in the bearish side, then bearish breakout. Okay, Friday opposite was supposed to happen, right? Anyways, this side, the bullish side, it came up. It came out in the bullish side. Now, because this bullish breakout was manipulated, that is why there is some confusion. Okay, there is still no confirmation, 100% confirmation, if this bullish breakout will be sustainable or not. Okay, now as such, what happens? Okay, whenever there comes the bullish breakout, we expect 3% to 5%, okay, movement in the bull side, and the same 3% to 5% movement in the bearish side, if that is the bearish breakout case. Okay, but this is not the bearish breakout case, this is the bullish breakout case, and again there is some confusion on the bullish breakout case. Okay, now to add more problem to this, the bullish breakout, there comes the zone of the Dow Jones itself. Okay, word zone, 50,000 to 50,500. Okay, these are rough numbers, rough, not absolute. Okay, absolute I'll mention on Monday and Tuesday in the pre-market analysis, okay, and in the subsequent updates. So in order to understand this, the breakout and this better, okay, I've written this thing in detail. And Goldman Sachs was the primary factor to push the Dow Jones up. I'm not saying S&P 500, but the Dow Jones up. Okay, so 90% of the times whenever Goldman Sachs is involved, okay, we know what happens. Now, if we think that the February 2nd and February 3rd movements will be repeated, okay, then there is no confirmation. But if that happens, then there will be heavy profit booking on Monday. Heavy profit booking in a manner that all of the gains that were there will be erased. Okay, now other than that, in order to confirm or in order to get a confirmation for the bullish breakout, okay, if the Dow Jones somehow sustains without manipulation, okay, on Monday it sustains, okay, then only we can consider this as the bullish breakout and we can expect some more bullish movement. Now, even if we consider this the bullish breakout and we expect the bullish movement, then there is a problem with this, the short-term bullish rally. What is the problem? The problem is the Dow Jones itself. How the Dow Jones is the problem to itself? Because when the Dow Jones moves above the 50,000 mark, then it automatically becomes unstable. Okay, and then from 50,000 to 50,500, 1% is filled with heavy resistance levels and zones, and without extremely heavy and very heavy manipulation, it's impossible for the Dow Jones to break this range of 50,000 to 50,500. This range can be breached only when there comes a very heavy fall back to the 47 or 48,000 range, okay, with some possibility of the 47,000 range. Okay, means Dow Jones gives up this much, 3 to 4%. It has to give, then sustains, then recovers. Okay, then only this will be possible. So now it is clear that Dow Jones, although there is a condition for the bullish breakout, but it has entered into the zone, okay, where we have multiple levels and zones. Okay, technically this is impossible, not possible, technically not possible at all. If you are a technical person, then you know it by yourself. It is not possible. Okay, only through manipulation, not manipulation, only through very heavy manipulation this will be possible, otherwise it's not. And if there comes very heavy manipulation on Monday, then what will happen? It will breach the entire range. Okay, however, any bullish movement here, okay, is giving an opportunity. It is a blessing in disguise, because now it is forming a new high and will give us an opportunity, because we know that eventually it will have to come down. Come down to what? Now there comes the S&P 500. Okay, comes, and it should come down to what? S&P 500 will be coming down to the 685x. Why the 685x? Exactly what we have seen on Monday 2nd of February and then on Thursday 3rd of February. On Monday it disrespected the 695x. Okay, it came down. On Friday it disrespected the 685x, moved up. Okay, so it has to come down. It may come down on Monday or Tuesday, Wednesday, but it has to come down and then to test, then to retest, then sustain, then only it is allowed to move up, otherwise it will fail. Okay, just like it failed on Tuesday 3rd of February, all of the gains were erased. And if you think that 685x is not as heavy as the 695x, then no. Okay, 685x is heavier than the 695x. Why? If you see that on Tuesday, the low was 6862, right? It did not come down, did not hit the 685x. This means that the obligation to the 685x was pending. Okay, then the next day we have seen that the S&P 500 came down and lost the 6,900 early. It was confirmed that only the 685x can help, otherwise nothing will. And because there were chances that it can breach the 685x to the 682x, but there will be a condition that it must recover to or above 685x, or it will spend the entire day at or around the 685x. That is why I mentioned that S&P 500 after that heavy fall will trade in between the 682x and the 687x, and the 685x will act as the tiebreaker. Okay, and also we can see S&P 500 hovering around 685x again and again, means up down, but around 685x. So what does all of this indicates for the bullish and the bearish movement on Monday, especially on Monday and then in the coming days for the S&P 500, Dow Jones, Nasdaq, okay, for the entire market? This means that if the stock market is not manipulated on Monday, okay, then Dow Jones will come down at least to what? Dow Jones will come down to the previous all-time high, that was on 3rd of February, 49653.13. This was the all-time high of the Dow Jones on 3rd of February. Okay, it will come down not just to this, but it will re-enter into its consolidation zone. It will then will try to sustain, struggle or so. At the same time, the S&P 500 will come down. S&P 500 will come down to what? It will come down to 685x, because now there is a pending obligation. There is a pending obligation to the 685x. Okay, now if both of the indices, S&P 500 and Dow Jones sustains, S&P 500 sustains at 685x, recovers, okay, and closes in a manner that there is no bearish crossover in the moving averages. Okay, similarly, Dow Jones recovers and closes above the 49,653. This is 653.13. Okay, if both of these conditions are seen, then we can expect some more bullishness in the market. Some more bullishness to what? 695x in the S&P 500 and 50,500 in the Dow Jones. Okay, there is a zone around the 50,500. Okay, there is like I think 60 or 70 points zone in the Dow Jones. Okay, so 60-70 points in the Dow Jones, you need to understand it is we are talking about 50,000. Okay, 50,000, and when we say 60 point or 70 point, okay, what does that mean? 0.1% or 0.15%. So it is nothing, 60 or 70 point zone. Okay, but the zone will be heavy. Okay, and even the manipulators will have to put a lot of money, billions of dollars, to push the Dow Jones beyond, okay, to or beyond this the zone. Okay, this means that as of now S&P 500 is allowed to move to 695x. Okay, and in this manner it will trade in between 685x and 695x. Okay, what will be the tiebreaker? The moving averages themselves and the 6,900. Okay, the zone 691x is also there, and S&P 500 has gained the zone, okay, on Friday. So this means that the zone 691x and 6,900 will act as the tiebreaker. If all goes well, okay, in a manner that the Dow Jones doesn't give up. Okay, it comes down, sustains, recovers, but trades within the 50,000 and the 50,500, the zone that is around the 50,500. Okay, but at the same time the primes of the S&P 500. Okay, see, S&P 500 and Nasdaq are the tech indices. Okay, so this means that if the tech primes, if the tech stocks, okay, if they keeps on moving up, then in that case S&P 500 will come into the condition that it can actually recover the 695x. If there comes consecutive closings, daily closings, all of the closings above the 695x, this means that now it is ready for the 7,000. It will enter into the 7,000, will hit the zone, resistance zone, and will fail. Okay, 100% it will fail. There is no question about that. Okay, if it comes into the 7,000 range, and there are the two zones in the 7,000 range, 100% it will fail. Okay, but this fall will be accelerated very heavy if the Dow Jones fails. Okay, so this is there in the bull side. What will happen to the bearish side? Well, now the bearish side is wide open, or means actually it was, and if as of now the MACD of the MACD is still trading, heavily bearish. Okay, stochastic RSI is in a condition to change to bullish. However, if the movement is dull and is more bearish, there comes no change in the stochastic RSI of the S&P 500 on the daily chart. It remains bearish. Then we will see heavy fall. Heavy fall to what? Heavy fall to the not to the 685x. 685x is just for the obligation. The obligation will be fulfilled. We will see consecutive hourly closings below 685x, and then it will enter into the 6,700. When it enters into the 6,700, then 672x is there to handle the fall, and then finally it will be coming down to the 6,600 range. In the 6,600 range, this fall will be handled, and then it will get the technical recovery. Okay, technical recovery of 2 to 3%. Okay, when it comes down to the 6,600, then what will happen to the Dow Jones? Okay, well, when this is happening in the S&P 500, then Dow Jones will be but guys, before that, if you have not yet subscribed to my YouTube channel, then please subscribe to my YouTube channel and hit the bell icon. And so far, if you have liked this video, then please hit like to appreciate, and your appreciation matters a lot. So when all of that is happening in the S&P 500, Dow Jones will find very heavy support. Dow Jones will not give up easily. Okay, it's not that it was manipulated. No, it was because of the consolidation. Because the consolidation has now created a very heavy support zone, that Dow Jones doesn't need any manipulation at all, okay, to sustain. This means that whenever it comes down within the consolidation zone, it will sustain, At least for 1 to 2 days. 1 to 2 days it will sustain. Means as of now, any fall up to 3%. From the current closing to 3% fall. 3% fall in the Dow Jones is allowed. 3% fall in the Dow Jones is like around 4% or 4.5% in the S&P 500. 4.5% in the S&P 500 means 6% in the Nasdaq. Okay. So this means that even if the S&P 500 is coming down, trading heavily bearish, Dow Jones is still holding with that the fall. All of that, the picture will change. Everything will change when the Dow Jones loses the consolidation zone. When it loses the consolidation zone, gives the closing below the consolidation zone, not one, two. Okay, two consecutive daily closings below the consolidation zone, then there will be a bearish breakout condition. When the bearish breakout is there and S&P 500 is trading in the 6,700 range or 6,600, okay, then it is allowed to up to 6,300. Fall up to 6,300. Why up to 6,300? Again, the same logic that I mentioned in the previous S&P 500 weekly technical analysis. The all-time high of the S&P 500 is 7,002. Okay, as long as the fall is within the 10% range. Okay, fall is not more than, it is less than 10%. Everything is fine, everything is good. It can complete this, the short-term bearish cycle can then recover to the bullish side. When it loses the 10%, more than 10% fall, then that creates the problem. Okay, that then opens the correction cycle. Correction cycle means 20 to 25% fall. Okay, and because the correction is long due and everyone was talking about the bubble burst and the recession, once it loses the 10%, then we are not looking for the correction. Okay, there will be chances for the recession in that case. Okay, and recession is not like, it will happen within a day, within a month. No, it will like 1 year, 1 or a 1.5 year cycle of the recession that will be there. This means that now even in the best case, even in the good case, okay, S&P 500 can move at most a little into the 7,000, even the best case, then it has to fail. Okay, Dow Jones is already unstable, is already in a condition that it has created a problem for itself. Okay, because it was manipulated. If this would have been a non-manipulated case, then there were chances that it can struggle in the 50,000 and 50,500 range, okay, for a week or so, and then it can move above the range. But because of that, the manipulation, okay, entire scenario has changed. Now Monday will be very, very important, very, very critical Monday. Okay, because we need to see if the moving averages are holding in this condition. Okay, and also how much fall is there, whether the 685x obligation has been fulfilled or not. If not, then what is happening in the bull side? Okay, if there is any kind of rejection, then on Tuesday or Wednesday there will be the fall. This means that for this manipulated movement to sustain, S&P 500 and the Dow Jones and the Nasdaq has to give very limited movement up down, mostly down movement, okay, for 2 to 3 days or until Wednesday. It should trade in that manner. Okay, in what manner? It should trade like, let me show you something. It is like, okay, so for example, it moved up here, then gave up heavily, then moved up limited. So for 4, 5, 6, 7 days, it was within a very, very short range. Okay, after this, the heavy movement. So for 2 or 3 days at least, the entire market must trade like this, 0.5% or 1% maximum from top to bottom. Okay, it should trade within that range itself, at least for 2 to 3 days. Okay, so that the impact of the manipulation can be absorbed and there is now enough money and this the movement or the market is sustainable, and then it can trade technically it can trade bullish or bearish. Monday in the first update, okay, and then in the midday update I will clear, okay, where the S&P 500 and the entire market is heading to. What are the chances for this, the bearish movement, or if we are seeing a bullish movement first and then it will fall. Okay, because when the S&P 500 comes into the session, then we will be having the numbers and we will see that what is happening to the technicals. Then the picture will be very much clear. So on Monday, this thing will be very much clear. So guys, if you have liked this video, then hit like to appreciate, and your appreciation matters a lot. And if you have not yet subscribed to my YouTube channel, then please subscribe to my YouTube channel and hit the bell icon. And if you have any questions that you want to ask, then please feel free to ask your question through the comment section. And if you want to get these daily precise updates of the S&P 500, Dow Jones, Nasdaq, and in a manner to the entire US stock market every day from Monday through Friday, as well as the stock market opportunities in the premium stocks 50 to 80 and the mid week update video technical analysis, then you can join my Patreon community. I have given the link in the description of the video and also in the comment section.